Hey there, welcome back to the channel. Today we're going to dive into something that might sound a little controversial but is completely legal. How the wealthy use LLCs to protect their assets and minimize their tax burden. If you've ever wondered how the rich seem to pay less in taxes while protecting what they own, this video is for you. I'll walk you through the strategies they use and how you could potentially implement some of these same techniques yourself. So what exactly makes LLCs so attractive to wealthy individuals? Well, there are 5 main benefits that we'll cover today: asset protection, tax flexibility, privacy, estate planning advantages, and liability separation. Let's break down each of these so that you understand exactly how they work. First up is asset protection. This is probably the most powerful benefit of an LLC. When you own assets personally, they're vulnerable to creditors, lawsuits, and judgments against you. But when your assets are owned by an LLC, they're separated from your personal assets. This means that if somebody sues you personally, then they generally can't touch what's in your LLC. Wealthy people often create multiple LLCs, placing different assets in each one. For example, they might have one LLC for their primary residence, another for rental properties, and a third for their investments. This creates multiple layers of protection, so if one LLC gets into trouble, the others remain safe. The second major benefit is tax flexibility. LLCs are what we call pass-through entities by default. This means that the LLC itself doesn't pay taxes. Instead, profits and losses pass through to your personal tax return. But here's where it gets interesting. Wealthy individuals often elect to have their LLCs taxed as S corporations. By doing this, they can pay themselves a reasonable salary, which is subject to self-employment taxes, and take the rest as distributions, which aren't subject to those same taxes. This strategy alone can save thousands in annual taxes. The third benefit is privacy. In many states, the owners of an LLC don't have to be publicly disclosed. The rich value this privacy tremendously. They can own property, businesses, or investments through an LLC, and their name never appears on public records. Instead, only the LLC name and the registered agent name appear. So some wealthy individuals take this a step further by creating a series of nested LLCs across different states, making it virtually impossible for anyone to trace the ownership back to them. Fourth is estate planning. LLCs provide significant advantages when transferring wealth to the next generation. Through something called family LLCs, wealthy individuals can gradually transfer ownership to their children while maintaining control of the assets. This allows them to reduce estate taxes substantially. Plus, they can apply valuation discounts to these transfers, essentially telling the IRS that the LLC interests are worth less than the underlying assets because they represent non-controlling interests. The fifth major benefit is liability separation. The wealthy rarely keep all their eggs in one basket. By creating multiple LLCs, they ensure that problems with one asset don't affect others. For example, if a tenant sues over an injury at a rental property, only the LLC that owns that specific property is at risk, not the individual's personal assets or other LLCs. Now, let's talk about some specific strategies that the wealthy use with their LLCs. One common approach is the Wyoming or Nevada LLC strategy. These states offer enhanced privacy protections and don't share information with the IRS. By forming an LLC in one of these states, then having that LLC own assets in other states, wealthy individuals create an additional layer of separation and privacy. Another popular strategy is the series LLC. This is like having multiple LLCs under one umbrella, but with less paperwork and lower fees. Each series is legally separate from the others, providing compartmentalized liability protection. This is particularly useful for real estate investors who own multiple properties. The charging order protection is another powerful tool. In many states, if someone wins a lawsuit against an LLC member, they can only get a charging order against the LLC interest. This means they can receive distributions if and when they're made, but they can't force distributions or take over the LLC. The wealthy know this creates a standoff where creditors often settle for pennies on the dollar rather than waiting indefinitely for distributions that may never come. For those with significant investment portfolios, the investment LLC strategy is another common one. By holding investments through an LLC, wealthy individuals gain not only asset protection, but also the ability to deduct investment expenses that might otherwise be limited on personal returns. They can also more easily pass these investments to their heirs with minimal tax consequences. Now, if you're interested in forming an LLC yourself to start implementing some of these practices, then I highly recommend using something like Northwest Registered Agent. They make the entire process super easy, like you can do it very fast, and they provide excellent privacy protections as well. I've used them personally for several of my business entities, and they've been fantastic. In fact, let me walk you through how easy it is to set up an LLC with Northwest. First, click on the exclusive discount link I've provided in the description below. Once you're on their website, click the button to get started. You'll be asked what type of business you're starting and in what state. Select LLC and choose the state where you want to form your LLC. Remember, this doesn't have to be where you live, but consider states like Wyoming or Nevada if privacy is important to you. Next, you'll name your company. Choose something that doesn't directly identify you if privacy is a concern. Then you'll specify the purpose of your business. This can be broad, like investments or real estate, and provide a business address. Northwest offers their address as your business address, which helps keep your personal address off public records. Then enter the members of the LLC, your contact information, and select any additional services that you might need. I recommend getting an EIN through them as well. It's convenient and ensures that everything is set up correctly. Finally, submit your payment and Northwest will handle all the paperwork and filing for you. The process takes just 3 to 5 minutes to complete, and that is actually why I recommend Northwest to everybody, because they make starting your LLC super easy while providing excellent privacy protections and ongoing support. Now, I should mention that while these strategies are legal, they must be implemented correctly. The IRS doesn't look too kindly on arrangements that exist solely to avoid taxes with no legitimate business purpose. Always consult with a qualified tax attorney or CPA before setting up complex structures. The Wealthy have teams of professionals helping them implement these strategies correctly, and you should have proper guidance as well. I hope that this video has given you some valuable insights into how wealthy people use LLCs to protect their assets and minimize taxes. If you found this information helpful, please hit that like button and subscribe to this channel for more content on building and protecting your wealth. Drop any questions you have in the comments below, and I'll do my best to answer them in future videos. Thank you for watching, and I'll see you in the next one.